Let's get started here. So thank you for joining us. Thank you for joining us for May's Tech Night. It is wonderful to be with people, albeit digitally and or pre-recorded this evening. For those of you that have not attended Central Maine Tech Night, we are a monthly evening event where in our small group setting, founders and leaders share real advice on how they overcame challenges, capitalized on their target market, and developed their product, providing you with actionable insight for your own products and processes. This evening, you may, and in the future, find us on Facebook or online at centralmaine.org at the Tech Night tab. I would like to thank our sponsors for this evening. This free event is presented by the Central Maine Growth Council and is sponsored by CGI, Thomas College's Harold Alfond Institute for Business Innovation, Valley Beverage, and Bricks Co-working and Innovation Space. Thank you to Bricks. In addition, I'd like to say hello to folks that are watching remotely or at home. This presentation is being viewed and recorded for later viewing, though it is typically being streamed when we are live in person at Bricks at Crossroads TV, channel 1301. So thank you in the future and in the past for Crossroads TV. In addition, and as an interpersonal note, I've had a number of folks from our Tech Night network ask about our free pizza and beer. So I continue to apologize that we will not be delivering that this evening, but it is wonderful to hear about folks thinking about our small but mighty network here. So with that said, and without further ado, I'd like to welcome Fame. Tonight's May Network Tech Talk is Maine Seed Capital Tax Credit Program and Fame Assistance, Capital for Entrepreneurs and Small Businesses during COVID-19. With expanded tax credit authority for 2020 to key loan programs that are available to Maine businesses and individuals and employees affected by COVID-19, in this live virtual presentation, Jennifer Fame, Director of Business Programs, and Christopher Fame, General Counsel, will provide an overview of which programs fit your needs and explain why Maine's Seed Tax Credit Program could not have come at a better time for Maine's startup community. For the folks that are with us right now, I would ask that you guys keep yourselves muted and submit any and all questions using the chat feature. So with that said, and without further ado, I would welcome Jennifer. Thank you so much for being here this evening.
Hi, thank you so much for having us. We're really excited to be here, and we hope that everyone's faring well through the more consistent virtual meetings that we've been having. Just a little bit of background about Fame. The Finance Authority of Maine is here to help businesses and education. So I'm just going to give a little bit of background and then I'll hop into the slide presentation. Fame offers a wide array of business assistance programs ranging from traditional loan insurance for both small and large businesses, all the way through investment tax credits. Fame has established a taxable and tax-exempt bond financing programs that allow for strong creditworthy firms in Maine to access capital at favorable rates and terms. And our mission was significantly expanded when the agency assumed responsibility for administering the state's higher education finance programs. And through a variety of loan, grant, and scholarships, we help Maine student and families meet the costs associated with higher education. And we also oversee an extensive outreach and counseling program that's designed to encourage young people to pursue higher education. And we also administer the state's 529 plan and the Next Gen College Investing Plan. So just a little bit about where we are right now through COVID. Our office is closed. All of our associates, with the exception of 5, are working from home remotely, and we've been able to keep up our operations. We also are currently offering our traditional programs that we have always had. We're continuing to offer those. And we also have some new COVID-19 programs to help our business owners that we'll go over in a little bit. Chris Roney, our General Counsel, is going to discuss our Maine Seed Capital Tax Credit Program, what that's designed for, how it can be helpful to businesses, whether in startup or growth mode. So I'll let Chris go into that. If you could click the next slide, please.
Hi, good evening. My name is Chris Roney. As Jen said, I'm the General Counsel at Fame. I guess that's a fancy title for being their in-house lawyer. One of my responsibilities falls into the bucket of programs Jen was talking about, that is our traditional programs. This is an investment tax credit program called the Maine Seed Capital Tax Credit Program. And this is a program that gives tax credits to encourage equity and near equity investments in young business ventures directly and through private venture capital funds. Essentially, it's a tax credit that investors can take. It's equal to 40% of the amount of your investment. So it's, if you invest $40,000 in cash, if you invested $100,000 in cash, you'd get a $40,000 tax credit, which you could take over 4 years. Those investments can be used by the companies that are raising the investments on any legitimate business expense, whether it's fixed assets, research and development, or working capital. Next slide, please. So this program is designed to stimulate investment, as I said. It is targeted to certain business sectors. So the businesses, the eligible types of businesses include manufacturers, what we call exporters of goods or services, where 60% of the business's clients are from outside the state. We also give credits for investments in advanced technology businesses and value-added natural resource enterprises. So they're typically smaller companies, under 5 million in sales is the limit. And we're stimulating what we would call passive investments, which is investments made by people who are not what we call principal owners, which is people who either own 50% or more of the company or are in high levels of management with some level of ownership. So those people, the feeling is that we don't need to incentivize them to make investments, since they can kind of control the business and make it a success or not a success. We're trying to raise capital from either angel investors or venture capital funds, where on a more passive basis, they're taking a higher risk on an investment they can't control. And we're hedging their risk by giving them a tax credit of 40%. Next slide, Garvin. So as I mentioned, the tax credits are equal to 40% of the amount of your investment. So a $10,000 investment generates a $4,000 tax credit. An investor could invest up to $500,000 in any one business over a 3-year period. So that's a pretty significant amount an investor can invest in, and any business can raise as much as $5 million in investment in a participating. It's actually 3.5. It just got reduced to $3.5 million. It was $5 million. It's now $3.5 million of aggregate investment in a company over the lifetime of the program, and as much as $2 million in any given year of investment to generate credits. So companies can use it to raise quite a bit of capital, and they're doing that. The investment has to be at risk, meaning it has to be equity, which is clearly at risk. But there are forms of debt, typically unsecured notes, unguaranteed notes that cannot call for repayment within 5 years, that can also qualify for tax credits. The tax credit itself, you get a certificate, assuming your investment qualifies. You get a tax credit, and you would take that in a series of 4 increments, 1/4 of the credit each year for 4 years. it cannot. The only limitation is it can't reduce your tax by more than 50% in any given year as a taxpayer. So if your tax due was $2,000, the most you could take in tax credits would be $1,000 in that year. So, but you can't carry it forward to the extent you can't use it for longer than those 4 years I described. You can carry it forward up to 15 years to take the full value of the credit. Next slide, please. The process for applying is fairly straightforward. The business usually first applies because it wants to qualify as a business so it can attract investors and tell people and tell investors or potential investors that if they invest, they would be eligible for a tax credit. So it's a significant tool for raising capital. So typically the business applies. There's a business application form on our website. It has to give the typical demographic information for the company. It has to give us a business plan or a narrative description of what the business is about to make sure it qualifies under one of the business sectors I described a little bit earlier. Has to establish that it's a Maine, primarily a Maine business. So once the business applies, we typically would send a qualifying letter to the business, and then it would then go out and raise capital. And the investor, when an investor is ready to make an investment, the investor files their application with FAME, showing their demographic information, the amount of their investment, the company they're investing in. They do have to get evidence of the investment. That would be like a canceled check or a wire receipt, and then describe the nature of the investment. Is it a equity purchase? Is it a convertible note, for example? And we typically review the documentation to make sure it meets all the requirements for the 5-year limitation and so forth. So all that's required to be submitted with the application. So next slide, please. So we do charge fees for qualifying businesses and investors. The business fee is for the application is $500. It's just a one-time fee, and then the investors, if you're an individual investor, your fee for your application for a tax credit is $250. If you're a private venture capital fund, which are typically larger investments, those are $500. The businesses are required to participate when they're participating in the program to file annual reports, giving certain information about their business, how much money they've raised, what the number of employees, what their payroll is, revenues, and so forth. That's basically designed for us to track the effectiveness of the program. We are required to report some of that to the legislature. So we do require those annually, and if we find someone's doesn't do their reporting, they don't get any more credits and risk having some of their credits revoked. So we take our reporting requirements seriously. Next slide, please. So one of the things that's been added recently is the ability for private venture capital funds to invest. And the benefit of in some ways, venture capital funds could always invest, but since it was an income tax credit against state of Maine income tax, it really didn't, and there weren't a lot of venture capital funds based in Maine. We weren't attracting very much investment from private venture capital funds from outside the state. So some provisions were added to our program to allow venture capital funds to obtain a refundable credit. So unlike the way I described it minutes ago about taking the income tax against the tax credit against your income tax liability and it being limited to half of your income tax in that year, a refundable credit, for a venture fund that wasn't located in Maine and had no Maine income tax, they would file a return, show the tax credit portion that they're able to take, the same 1/4 increment for 4 years, and claim a refund for that amount. So a venture capital fund made up of in-state investors or out-of-state investors could invest and get the value of the credit back to the fund. So the fund's the investor, the fund gets the tax credit, and it can do with the cash it receives from the credit refund, it could then distribute that money to its investors, reinvest it in some of its investing targets, but it has proven quite useful to entrepreneurs in Maine for raising capital from venture capital funds from both the Maine funds and from funds from the United States and even actually international. So it's worked really well. And those investments can be as large as the program limits, which is again $3.5 million per business over the life of the program, and $2 million in any given year. The only limit is you have to have you can't have too few investors in the fund such that you have more than $500,000, the effectiveness of $500,000 of investment per person in the fund into the business. So we're trying to discourage people from joining funds to get around the $500,000 limit of investors into particular businesses. So but a fund that has many investors, this would not be an issue for, which is the more traditional model anyway. So they could invest, venture funds have been investing, $1 million, $2 million in some of these businesses over the last couple of years. It's been it's been a very sought after credit for businesses courting venture capital funds. We think of traditional venture capital funds as serving a particular model, being something you typically see in Boston or elsewhere, where it's a professionally managed fund, and you have the fund manager. The fund manager makes all the investment decisions, and the investors in the fund itself don't have any control. And that's the model we use to qualify a fund. And it doesn't necessarily mean it has to be a what I would call kind of a true venture capital fund, but if it is as multiple investors with multiple investment targets, and it still has the fund structure where you have an investment manager and who has professional experience managing funds, if it could qualify. So these aren't all these funds aren't all these major Wall Street type venture capital funds. They could be smaller boutique funds, if you will. And again, a very useful tool for businesses.
Chris, do you, generally speaking, any trends with regards to the size of the VC firm that at least previously has been attracted as a result of the program?
They've really run the gamut. We've had, and it's sometimes very hard to tell because venture capital investing has evolved over the past 10 or 15 years, and the traditional model that I described is not even actually isn't the traditional model anymore. Most investment funds now create individual sleeves or silos inside their funds to invest in particular businesses, and they might have investors that flip back and forth between different silos. So it's not always easy to see kind of the size of the family of funds, if you will. But and we have smaller, like I said, boutique funds, and some international huge funds. So I'd say kind of on average, it's it's more of the boutique funds, not mom and pop, but kind of more specialty funds, not not huge Wall Street firms or Boston area firms.
Thank you.
Yeah, is there another slide?
Yep.
Okay. So we had been, the legislature had given us total of $5 million of credit authority each year. And over the last several years, that's been going faster and faster each year. I think the first year they gave us $5 million. It maybe lasted most of the year, maybe into December. The next year lasted into the summer. The next year it lasted into March, and for the past several years it's lasted one day, which is January 2nd. So credits are given on a first come first served basis, and we've been sold out on January 2nd each of the last 2 years. So obviously there's an over demand for the credits. So it's certainly more demand than $5 million. for the year. We were successful in getting legislation passed. We've been working on it we put it in last year, got carried over to this year. We were successful in getting into the supplemental budget that passed in March, just before the COVID problem. It raised the annual limit to 15 million from 5, which is a pretty significant raise. And they, as a transitional measure, gave us, essentially the difference, the $10 million difference between what we'd already given in 2020 in January for the balance of 2020. So, starting in April 1st, we've been working towards giving out an additional 10 million in credits. Last I checked, we've given out about somewhere between maybe a little over 2 to 2.5 million in credits just over the last month and a half. So there is still quite a bit of activity going on, even in spite of this crisis. Several companies have been very successful in raising pretty significant rounds after April, and not just for COVID related business issues. These were businesses that were doing well or relatively unimpacted by the COVID crisis, but we're in the middle of capital raises and the news of additional credit availability created a catalyst for getting the closing on additional financing done. So we're excited to have more capability of giving tax credits. It makes our administrative lives easier, because I was really getting tired of swallowing the elephant every January 2nd, taking 3 months to basically digest all of the credits that ordinarily would come in over the course of a year, and now hopefully have a little bit of extra runway. And frankly, it's more to our mission. It gets more capital out there, and I think we see it as one of our best programs to help small businesses that we have. Now I get to turn it over to Jen to go through our more traditional loan and loan insurance programs, including COVID ones.
Thanks, Chris. I'm Jen Cummings. I'm the Director of Business Programs at FAME. Thanks everyone again for joining. So we have our normal programs that we currently offer, which I'll touch on, and then we kind of tweaked them each to be relevant through the COVID-19 crisis. And what I would say that to kind of preface everything is that any commercial loan that we have on the books, we are offering deferrals or interest only at no charge for customers that we already have. We, like the SBA, have a commercial loan insurance product, and our traditional product is done in conjunction with a lending partner, so a bank or a credit union, or at times an investment firm that may have a lending arm. So we offer an insurance policy on loans that financial institutions may feel are a little risky for what they're willing to take on. So they'll purchase a policy from us that would cover up to 90% of their loan amount. And with that program, we also offer an online portal that essentially allows the lending institution to put the parameters of their loan request into an online application that immediately tells them whether or not they qualify for our loan insurance. And that has a little bit different limits. They're a little smaller than they're a lot smaller than our fully underwritten process. So our fully underwritten process, we can insure up to a $7.5 million exposure for FAME. So that could be a 75% loan insurance policy on a $10 million loan from a bank. We also offer through our online portal, we go up to $750,000. So a lot smaller, but still a good loan amount that can be given an instant approval, so the bank knows what they're doing, what they can offer their borrower instantly. We also have direct loans, so loans that FAME gives directly to a business. And these are traditionally higher risk loan borrowers, maybe startup companies, could be sub-debt. It could be in participation with other institutions like Maine Technology Institute or Coastal Enterprises. So we do partner with other institutions to kind of mitigate our risk. So we did tailor each of those programs when the COVID pandemic came out, and they are a portion of our typical limits. Next slide, please. So our commercial loan insurance product that we currently offer, as I said, goes up to $750,000 through that online portal. And what we said to our lending partners was, okay, we want to give you an expedited loan product that you can use to help your borrowers that have been affected by COVID. So any loan that they put through our portal will automatically receive a 50% insurance policy, regardless of the scoring. They are able to get a 75% insurance policy if the borrower meets certain financial criteria. These are up to $100,000 loans, and we are waiving our commitment fees and our business asset. We're requiring a business asset filing to secure the lien position and collateralize the loan, and that's regardless of if it's going to be a second or a third, just so we kind of have some sort of security if the loan were to ever go bad. The banks have utilized this program a little bit. I'd say we were hopeful it would be utilized more. But we were hoping that the banks would take half the risk with us and try to help out in what way we could. But that $100,000 limit is deeming a little bit problematic in that people are looking for a little bit higher of a loan amount. So, but we do have that as an option, and it is being used. Again, not overly used, but slightly. So. We have the commercial loan insurance through our OLA, but that application needs to be done through a financial institution, and then they would apply on our website through our OLA portal on the borrower's behalf. The borrower would be required to fill out a FAME loan application as well as a personal financial statement as well. Next slide, please. We're also offering some FAME direct loans in conjunction with COVID. So the first one that we offered, the interim SBA loan, was to do with the EDIL loan that the SBA originally came out with when COVID first started. And this was intended to fund the SBA loan after it had been approved, but prior to the SBA closing. So it would be available within 48 hours, and it's up to $100,000, regardless if the SBA commitment or approval letter stated the loan was for more than $100,000. This advance per se would only be up to $100,000, and it would be repaid once that SBA loan funded. So that was one of the options because we had heard that the turnaround time was causing a little bit of issue for people in that the funding was just taking a little longer than they had liked. However, when SBA came out with this program, we had worked with them to offer this, and they were able to revamp their program and offer the closing and funding a little bit more rapidly than they had originally anticipated. So, so we're offering this program as well as a traditional FAME direct loan for COVID borrowers up to $50,000. So this is something where a business would apply for funds directly from FAME with no bank intermediary up to $50,000, and we're offering that at prime minus 1%. And again, the business asset filing in conjunction with a reduced origination fee. So typically it's 1%, and we reduce that to 0.5%. these can be for working capital. They can be for really just any need that a business is having during the COVID crisis. These are underwritten, so they're not grants. It is a credit decision. And most people are applying for the full $50,000. We have been inundated with applications for this this program. We set aside $5 million for this, and I think as of today we had closed a little bit over $2 million, and we've received, I believe, 176 loan applications. And just to put a little context in, I think last year we processed 13. So we really had to ramp up our underwriting and intake process to be adaptable with the need of this program. There is a 1-year balloon on it, so we can amortize it out longer, but there is a 1-year balloon to allow us to check in with businesses after a year and see how things are going. Since they've received this money, they may have also received money from other sources, and just to see how things are picking back up, or if there's other needs that we have to address, since hopefully the pandemic will be over in 12-month period of time. So those are our products that we're offering for businesses affected by COVID. I do just want to put a little plug in. I know this this audience typically is entrepreneurs. That FAME direct loan that's exclusive of our COVID product is driven for entrepreneurs, for startup companies. So we're able to help businesses that may be pre-revenue, may have, you know, an idea that needs to be, you know, commercialized. So we can help with all of those instances. And again, we do likely partner with MTI or CEI on those efforts to mitigate our risk profile. But just kind of an overview of all those products that we're offering. And I'd be happy to answer any questions on those, or Chris on the Maine Seed Cap program as well.
Absolutely, and thank you so much. Really wonderful and clear information, extremely valuable, and also great to, within the context of COVID-19, to see the expedited deployment of this capital in such an important time as a result of such an important organization. So thank you to FAME broadly. You touched on this a little bit, maybe a question for either of you with regards to the tax credit program, and more on an anecdotal note, based on your previous experience, for an entrepreneur that's maybe reviewing the program, generally speaking, you know, what is your what would you love to see in the function and form of a Mr. or Mrs. CEO with regards to where they are in terms of, are they within kind of a Series A range? You touched on this a little bit. Or what's their finance stack looking like? What are those other programs they're bolting on? What is the life cycle of the product they're developing? Kind of where are they maybe on a Gantt chart, if you will, in the innovation timeline?
Right. So, I mean, the beauty of this program is its flexibility. So because it's a tax credit, it relies on the actual investor to make the investment decision. And so they're the ones that have to be sold on, you know, whether the business is a good investment. I mean, we're taking 40% of the risk off their plate, but they still have 60% at risk, and so they're still going to want to make a good investment decision. And so, you know, we see anything from a complete, obviously usually conceptual stage, but pre-operational, all the way through operational. We have had participants like Quaddy Shu, who's been around for he's in kind of in Lewiston. They've been around for a long time. They're a manufacturer. Their sales, don't top out. And so, so they can be used for, really like first round of angel investors, after friends and family, sometimes remote family can participate, but all the way up into, kind of Series A and beyond. You just, at some point, if you're successful, you start hitting the sales limits or the program participation limits of which were 5 million, and we had a couple of businesses cap out because they essentially were very, very successful raising capital, but I think that with a limited resource, we don't want to give frankly too much help to any one particular business at the expense of funding more businesses that could also create jobs and be good for the state. So it's a great question. It's really it's almost anywhere. So
thank you for that. That's really helpful. So particularly, I think in Waterville, in our region, one of our strongest economic and, of course, educational assets is our our growing knowledge-based economy, both with regards to we got over approximately 20,000 college students within a 20-mile radius of downtown Waterville, not limited to Colby College and Thomas College, and we're seeing an emerging tech sector arise and bioeconomy. Selfishly, do you mind touching on the Alphon Leadership Program, and in particular, what that means maybe indirectly in terms of for students in a COVID context with dealing with student debt?
That's a good question. So I happen to know a bit about the Alphon Leaders Program. I'm not an expert. We have Martha Johnston's our in-house expert in our education division for running that program. And I might be out of date in terms of some of the dollar figures involved, but that's a program that we have a couple of cohorts a year where people in typically STEM jobs these are post college grads who are working in Maine in a STEM field can get some of their student debt forgiven or essentially loans paid by the Alphon Foundation for staying in Maine and working in Maine in the STEM industry. So they've been refining some of the details in terms of how long you have to work in Maine. I believe it started the program started where you got two different payments, one after 5 years and another after 10 years. But it was a fairly significant payment, like I think up to $60,000 total could be repaid. But I think some of the changes they've made recently brought those numbers down. I guess I'm just not current with what the current requirements are for staying in state and what the maximum payments are. But certainly, that program is designed, to kind of stem the tide of the brain drain or attract STEM field employees. So employers typically use that, to attract. Maybe they use that in their attraction package for potential employees when they're recruiting from Boston or other places where those types of employees might rather settle. It can be a good tool for the IDEXs and the other places like that need to retain high quality STEM qualified people. So, COVID aside, I mean, these are typically people who've already gotten through school, so don't have to kind of deal with that. But at least, are, and hopefully, their employers are not badly affected, and they can continue to use the program. Again, if they continue to work and stay in Maine, then they continue to earn the loan pay downs. So I would say it's a great it's a great tool for businesses that are in the in the STEM field. The employee they can offer they can essentially work with their employees to get this benefit that doesn't cost the employers anything, but it certainly enhances their ability to attract good employees.
Thank you so much for that. If there aren't any other questions, I'll just slowly pause here for a moment. I would like to again thank Jennifer and Chris here so much for joining us and providing us with this wonderful presentation that will live in perpetuity here. We have provided some links in the comments section, but for folks watching at a later date, we'll also link out this presentation and with the adequate links and resources as well. So thank you so much. Mike, I'm seeing your face there. I didn't want to jump over you if there was a general question or not.
I just wanted to reach out, Garvin, and thank you for hosting something like this, because even though we may ourselves not be business owners per se, it's certainly nice to have as many people connected in a network to help out some of our small businesses and organizations. Interestingly enough, many of our small nonprofits are also in the same situation, and being able to qualify for some of the COVID programs through the SBA, like the PPP and the other programs as well are extremely important. And just want to thank Jennifer and Chris for reaching out and accepting the request to do this. And some of the things that they've been doing recently is just fantastic, because sadly, I think we all realize that some of our smaller businesses are extremely vulnerable of not coming back when this COVID crisis is over. So anything we can do to get out on the street and sort of spread that news is exceedingly important. So I really appreciate the effort that our colleagues from FAME have been doing. And I realize you guys have been working well outside the regular hours to do it. So as a citizen of Maine, I really thank you, because I think one of our strengths is that in any of these types of crises, Maine really does share the dare go sort of thought of leading the nation on this. So I'm really happy and proud of you guys as being able to step up for small business.
Thank you for those thoughts, Mike. Yeah, I appreciate it. And we do appreciate the opportunity to come on and speak about it. And obviously we're always available for questions. Our link is out there, but very happy to take questions any day, anytime.
Thank you.
Mike, very well said. And so thank you so much to everybody. FameMaine.com. Locally, if you're a business in Waterville, the Growth Council is co-located with CEI's SBDC, MTI, and the Chamber of Commerce. So what's really critically important here is us wanting to build a team around you and your needs, both within a COVID context, but also growing your business, jobs, and GDP here in Maine. So thank you for folks that have tuned in, and thank you so much for FAME, and thank you to our sponsors this evening. We miss all of you that we typically see at Bricks, including our free pizza and beer. For folks that are curious about Bricks, they will be phasing in and in regulatory compliance with the state of Maine and CDC, and opening in likely phase 2. So we look forward to being with you all shortly. In the interim, please let us know anything you need. And again, thank you so much to FAME this evening. The second Thursday of every month, we look forward to joining you and our Tech Talk network. Cheers and have a lovely evening.
Thanks, Garvin.